Good morning, ladies and gentlemen. This is Butch Shorak, Options University, Monday, June 18th, 2012. Access to this webinar is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. We're not a service that tells you what to trade. We're not implying or guaranteeing any profit. And with that, let's take a look at what the market did during the last week. And if we look at the economic announcements during the last week, it was kind of an interesting week. It was options expiration week, and as we saw, the economic announcements really didn't affect the market all that much. Traditionally speaking, it has been a down week in the past for the overall market. But in our particular case, with the strong bounce that we've had off of the bottom, which was the first bottom that we've really put in after this long pullback, we see that the market was ready for a bounce, and technically that's exactly what it did, is it popped up through the 30-day moving average. So economic announcements this past week did not mean a whole lot and didn't really affect the market all that much. There certainly was some emphasis on Europe and on Greece. And the week after options expiration, which is this coming week, certainly has been disastrous in the past. The Dow Jones has only managed gains in 2 of the last 22 weeks after expiration and has been down 13 straight. So for the last 22 years, this week has been an absolute disaster. Average loss over those 22 years was 1.2%. So it'll be interesting to see what happens to us during the next week. As far as economic announcements during this next week, we see we have actually nothing on Monday, but then comes the big one. FOMC meeting begins on Tuesday with the announcement, of course, at its typical time at 12:30 on Wednesday. This is huge and certainly can move the market. Be interesting to see what Bernanke and the group decide to do, whether there's going to be stimulus provided for the economy as the economy keeps puttering along, fear of what that effect could have on the election, and Bernanke, I'm sure, does not want to be accused of influencing the election. So it's an interesting situation that'll happen during this week, and it certainly can pull the market down. Jobless claims will take place at 8:30 on Thursday, and we'll see whether or not those continue in their particular move where they really haven't been doing any great disappointments or any great surprises. Existing home sales take place on Thursday, again not moving the market much anymore. And of course on Friday we are showing absolutely nothing. As we move forward through this week, there is certainly big news coming with the FOMC, and could be big or could end up doing nothing. Personal opinion, don't expect much out of it. Don't expect the Fed really to make many changes at this point. The economy is puttering along, and it's not sliding back, and it's holding up in spite of what we're seeing out of Europe and Asia. So don't expect to see much out of that in this week. Just an opinion. All right, you see that we were in a downtrend, and now what we're doing is we're headed toward a sideways trend. 30-day moving average following through right there. We saw that we had a low here, we had a lower low there, we had a high there, and a higher high here on Friday as we shoved up toward that 50-day moving average. And so you see we are in an up cycle in what is now a sideways trend, which is exactly what we've been talking about, exactly what we've been expecting. And Friday or Thursday and Friday, if you do make some weekly trades, we certainly were at a midpoint between our high and low. Expectations are we're going to head for about 1358, right in that area. And so what we're establishing is our sideways summer trend, and this is what we've been waiting for. Notice that the moving average has moved down into this area as we expected. We expect that that 30-day moving average will come down in there, and we'll have a trading range basically set up for the summer. 50-day moving average may provide resistance as we go up. Big breakout on Friday as we saw the market break. Let's take a look at just a little closer look. Here's our 30-day moving average. There's our 50-day moving average. And there's our 200-day moving average on our 1-month chart of the SPX. And we see that if we look at the last week, we got higher highs, higher lows, up cycle, broke through the 30-day moving average. So working on that sideways trend where we spend part of our time above the moving average, which will be up in here, and part of our time below the moving average, which is where we expect the pullback to be, as we've established and hopefully have pretty well delineated exactly what our summer trading range is going to be. And so we can see it on a much larger scale here versus the 3-month chart that we just looked at. Let's take a look and see what the Dow did during the same week. See that the Dow broke up through the 30 actually 1 day earlier. Turned out to be a precursor as to what was coming. Already hit the 50-day moving average, and we'll see whether that operates as a resistance or not. Dow leading us higher as those 30 stocks are showing us some strength. Next, take a look at the NASDAQ, which has been lagging, spent a lot of time below the 200-day moving average, actually at the 200-day moving average. And we see that we got a lower low, and a high, and a similar high. NASDAQ has not yet broken out. Broke above the 30-day moving average, but we still have this impediment right here, as the NASDAQ has lagged some as far as its strength in leading the market up. If we see the NASDAQ suddenly catch on fire, we could explode even higher than that 1358 we talked about on the S&P. Next, let's take at the Russell 2000, which got us a low, a lower low, and there's our high, a lower high, and still a lower high. So you see of the 3 indexes, the Dow seems to have the one that has the most strength as we're moving forward. Okay, with that in mind, let's take a look at some of the other things that we like to look at every single week, as we see the VIX settling back down, heading towards our more normal range below 20. And we'll see if as the market expands a little bit, we might see some of that volatility come out of the market. And not only the volatility, but we can expect that the average true range will come out of the S&P as time goes on, if we settle into a normal trading range for the summer. So we could see lower ATR, average true range. In other words, not so many points every day on the S&P, and we'll see it settle down and have a little more difficult time finding premium in the SPX. Bonds, as we look at an exchange-traded fund for the bonds, we're going to look at the TLT, which is one of those exchange-traded funds, a Treasury bond fund, 20-year, and we see that it has certainly caught fire as the market pulled back. It went out of that trading range and really hit some really extreme highs. Quite a bit of surprise on that. And we'll see what happens to the bond funds if the market does settle down here a little bit. And money will probably leave bonds and head back into the market if we have more certainty and, of course, less volatility. Next ETF that we're going to look at is the XLF, which tells us something about the financials. Remember, it's very difficult for a market to go up without the financials following. And we see that as the S&P broke out, so did the financials this week on Friday. And we ended up with a very nice upcycle and developing that sideways trend as we closed above that level of resistance. And we're headed towards that 50-day moving average with the XLF, very much following and mimicking the S&P. Okay, next exchange-traded fund that we're going to look at give us an idea of some of the sectors is the oil sector. As we see, it has just flattened out, going absolutely nowhere during the summer months. So this has definitely pulled back. Seems to have lost some interest and speculation in the oil market, as we seem to be trading at a low for the year. Final ETF that we're going to take a look at is that of gold. We see that gold rallied as the uncertainty came into the market, and we see that we've had a nice little bounce in gold, as it seems to be having a little trouble keeping going up, and the air seems to be getting a little thin here, but it did certainly show good progress throughout the week as the market rallied. And we're looking at what could be a reversal signal. So look for a lower high and a lower low as we begin the pullback on gold, as it may have had that rally, and it may be coming and slowing down at this point. Okay, with that in mind, let's take a look at the volume this week, and we saw that we did explode and go above that previous resistance point, went above that 30-day moving average on kind of normal volume. Certainly didn't have extreme volume in it, as we did get that breakout in the S&P. So not a great deal of volume, no big volume surge as we popped out, but then again, remember that the moving average does not mean as much on a sideways trend as it does on a downtrend or an uptrend. These diagonal moving averages lose their importance, and so what we really look at when we start going into a sideways trend, which is what we're going into now, is we look at support and we look at resistance, wherever that resistance is going to be, expectations that we're going to go up that high, or at least up to the 50-day moving average to establish our summer trading range. So with that, we took a quick look at the market, and we've got an interesting week coming up with Bernanke, who certainly knows how to move the market. Whether he will choose to do so or not will all depend upon what's going to happen with respect to stimulation to the overall economy. So with that idea, this is Butch Shorak, and for those of you that are gold members, stick around and see what we got with our charts this week, as we've got our charts that we watch each and every week for the gold members. And for those of you that are not gold members, thanks for being with us. For more free videos, go to www.optionsuniversity.com/free gold. That'll also be listed at the end of this video, so you can follow that down. For the rest of you, the gold members, hang on and we'll continue on with our stocks to watch. In the meantime, thanks for being here. This is Butch Shorak, Options University, Monday, June 18th, 2012.